Hey guys, how y'all doing? Just tuning in here for another week of updates, and I got a bunch of things to talk about. The market's doing its crazy thing. I know there's kind of a lot of talks going on. I think NFT New York is happening right now. Got some updates to talk though about on UpV2. A couple of little updates on what's going on there. Some potential new blockchain partners. I do want to talk a little bit about what's happening. For those of you that are, paying attention to Celsius, Bancor, and the associated products that are out there, and a bit more about Ethereum, BTC sustainability, some things like that we've kind of been looking into. So let me go ahead and dive right into it. So I suppose the first chunk here is talking about UpV2. So at Consensus, we did go ahead and announce that the first blockchain to support UpV2 is going to be Harmony. And we are really pushing this through quickly here. UpV2 is a lot more complex than anything else that we've kind of deployed here to date. It's going to incorporate a lot of features. For example, Darby, it's something that we've been talking about for some time, but that's going to actually be a major piece of UpV2, just to ensure the token value can be stabilized and the earnings off of that stabilization can go into increasing the redeem value, making sure that the integration with Aave is going smoothly, that the audits are all good and everything's checking out great. So with all that being said, I don't think that we're on track to hit UpV2 for this quarter. It is likely going to be very early next quarter that it comes out instead, but I'll keep you guys posted there. Also, just so everyone here is aware, though we're doing the rollout here on Harmony as the initial launch of UpV2, once it's deployed there, essentially any blockchains that also support Aave are going to be a piece of cake to kind of go live with. Ones that don't, it's relatively modest changes to get them to support. So this is a pretty broad scope, and I think once we're done here with the Harmony implementation, we can go ahead and start to roll that out to the rest of the ecosystem. So I'm super excited about that. It's going to be a really cool product. It's going to be fully featured when it comes out, and that's kind of what we're striving for. It's not too challenging to kind of get that new version out there, but there's a lot of features that we do want to include, as we've been discussing publicly, that I think would be best to have right there on day one. So something else to kind of talk about, although we're really focused here on UpV2 and we're really focused here on this next major step or major milestone in the company, which is probably going to be coming here in mid-August, we are still talking to blockchain partners. We've met with quite a few, especially recently. We've been expanding the queue on who we want to build with, who we want to work with. And there's a pretty long list there. I think for me, though, probably there's a pretty long list though. For me, at the very least, one of them is pretty standout. I just think it's a really good platform. It's a company that we've been working with for a long time that we haven't built there yet. So I'm super excited to continue looking at additional blockchain partners so we can expand the ecosystem for UpV2, because that's all going to filter in really well with where we want to go as a company. So I suppose I should just go ahead and tease. We are going to be having a pretty major announcement here coming. I'm thinking mid-August at this point. It may push a little later into the month of August, but there is a pretty major announcement that we're looking to make here as a company, and I'm hoping that's something that we can come out and kind of show, where UpV2, blockchain partners, Bridge, U-Trade, all of these different things kind of work into the future that we're trying to build. And it's no hint that that future is going to be very much catered to sustainability. For those of you that do tune in here constantly, there's a read between the lines that you could probably do to kind of dismantle the topic and kind of figure out what I'm talking about here. But I'll just continue to kind of push forward on talking about sustainability, a little bit about the market and where we see some issues. So with that being said, I do want to talk briefly about Celsius, Bancor. I mean, there have been exchanges suspending withdrawals, all kinds of different things happening. essentially what's going on is similar to Terra in some ways. A lot of DeFi companies, a lot of platforms, lending platforms, they saw a huge opportunity in kind of taking advantage of a growing market to better to basically offer customers better services. So what they could do is do things such as take advantage of Bitcoin going up in value and using that that holding or that collateral to kind of offset things such as impermanent loss, like we saw within Bancor. They have now limited their impermanent loss protection, and we saw something similar in Celsius, basically using the upward trends of the market to provide better returns for people that participate, and that's great. I think that was great. It's a very interesting way to approach things. It's a very interesting way to direct things, and it's not too hard to draw similarities between what they're doing, what they've done with their platforms, and what we're doing with UpV2, with one kind of major difference here. UpV2 is not collateralized by a different token. It's going to be entirely collateralized by the native token, which means that it can always be reinstated. So we're not taking the tokens that are backing up and buying Bitcoin in hopes that it goes up in value so we can give a better return with some downside risk. No, we're just taking the native tokens that we have and using existing staking lending platforms on those tokens to provide better returns. Is it as flashy as buying a bunch of Bitcoin at a low in hopes that the market, bounces back to 50K and giving everybody a 75% return? No, it's not as flashy as that, but there's no downside risk. And that's kind of informed a lot of the decisions that we make. And that's why when you look at things like solving impermanent loss, we have a really interesting approach here. We have a very interesting approach here. And I know that we haven't talked too much about Darby and what we're doing on the institutional side, but that's going to be a major piece of V2. And I know that we haven't talked too much about like specifically how Aave is going to be utilized to provide better returns. But at the end of the day, the collateral remains intact in everything that we do. And this informs every decision that we make. So if it's a bear market, a bull market, if it's a flat market, whatever, everything remains intact. And there's a very simple right that we want to preserve, and that's the right to reopen, redeem at any time. And being able to do that kind of demonstrates where we set that restriction, so that in any market condition, it still operates. There's no difference. And that kind of comes back to, we have a team discussion every week. Every Tuesday, we have kind of our internal all hands. And this was a major talking point for me this week as well, is how we're doing. How are we doing within this market? And frankly, we got started in early 2018, coming into the last bear market, and from that we learned to build things in a more sustainable and reliable way, to make promises that we can follow through on, to make commitments that we can observe no matter the market conditions. And that's been a big focus for us since day one. So when I take a look at the market today, we're in a great position. We have no outside investors or equity and things like that we owe. We're entirely within the company's confines. We have no debt as a company. We're in a financially very good position relative to our costs and things like that. We're ahead on our taxes, ahead on regulatory, the best legal and tax partners that we can get. So from my perspective, not only that, we're not coming into some major issue with the industry that we're in. There's not some critical DeFi movement that's going to cause issues for what we're trying to achieve. There's not some massive swing in NFTs that redefines what we do as a business, and we're not coming into some merge that could potentially unlock a ton of tokens and cause issues with our company. So right now we're in the best position. Frankly, I just said this yesterday. I can't think of a company that's in a better position than us to take on this next step of growth in the space that we're in. So I'm really looking forward to coming in here to August, kind of letting everyone in on what we're building here and what we're trying to achieve within these next few years, and kind of taking that next step on sustainability and building off of the solid foundation that we have. So with that being said, I suppose we can talk a little bit here about ETH and BTC. I put some of this out there, and I've been mentioning this before as well. And a lot of these blockchains are kind of building off of this, or I should say, I've been doing research on kind of how these blockchains operate, right? So you take a look at Bitcoin, Ethereum, and basically everything as a result, because that covers the broadest end of the spectrum. And we all know, Bitcoin is minting Bitcoin, and that's how they sustain their ecosystem, right? Or that's how Bitcoin sustains its ecosystem. It pays miners to mine. They mine for those Bitcoin rewards. There's some inflation there, close to 2%, a bit over 1%. Ethereum does something very similar. And if you look at the blocks on ETH, there's 2 ETH minted per block. And if you look at the ETH 2.0 version, there's going to continue to be a staking validator type reward over time. So people tend to chalk that up as just inflation, whatever. I see it very differently. I see that as cost of operation. And essentially what those are is that's how much it costs to operate that network. Now, maybe electricity costs more sometimes or less sometimes, whatever. At the end of the day, Bitcoin as an entity itself is paying out a fixed cost to operate that network. And if you take a look at how that flushes out, it comes out to about $6 billion per year just to operate that network. You take a look at Ethereum, and coincidentally, just right now, based on the pricing of the market, it's also about $6 billion per year to operate that network. And it's a lot. It's quite a bit considering that we're in blockchain. We're not sending a huge amount of data. A lot of that cost is absorbed by proof of work. I know that Ethereum is trying to transition into proof of stake, but that's a ton of funds to kind of inject into the validators of these markets. And I think that causes a lot of pressure on the ecosystem that they're in. And if we take a look at that and we consider the fact that they're pushing, or the communities behind these are pushing for higher token prices that restricts the ability for businesses to operate there, these are kind of competing ideals. And I think that these things do lead to the situations that we're seeing now in the market. And it's something that we're really actively looking at how we can provide a better solution. L2s that are out there, Optimism is doing awesome things. Arbitrum is out there doing very cool things. There's tons of solutions there to helping improve that. But I think that we're a lot more interested in taking a look at the root and seeing how we can come in and better support these kinds of partners. So with that being said, guys, I think I'm going to cut out there. Thank you all so much for tuning in, and I'll keep you all updated on what's going on and kind of what we're working towards. And see you all later. Bye.